Hello and welcome. You tune into Buy Now Sell Now with me, Ankita Saxena and Kanishka Sarkar. This is a show where we get all your questions answered. But before we get started with the show, there's a big breaking that we are tracking. Supreme Court has upheld JSW Steel's acquisition of BPSL and the resolution plan of Bhushan Power that has been upheld by the Supreme Court. Let's go across to my colleague Prakash Pridashi, is now joining us with the details of this big breaking. Prakash, take us through everything that you've got.
It's a very significant development coming in, a very positive development for the JSW Steel as well. The Supreme Court has upheld the resolution plan for JSW Steel Limited for Bhushan Power and Steel Limited, with an approx rupees 20,000 crore. The Supreme Court has rejected the objections raised by the ex-promoters and certain creditors of BPSL. A bench comprising Chief Justice of India, B.R. Gawai, and some other judges had reheard the appeals against the resolution plan after recalling judgment delivered by two judge bench. A very significant development coming in that essentially means that JSW Steel can retain the control of a company, and at the same time, lenders will not have to face a hit of approximately 34,000 crore. You are aware that the review plea arose after Supreme Court's 2nd May ruling, where JSW Steel's resolution plan of BPSL, which was resolved at around rupees 20,000 crore. And then, after order of this liquidation of BPSL, a lot of concerns were raised by the government as well. In fact, the government of India was of the opinion that it could have significant implication on overall IBC process. And therefore, there was several review petitions before the Supreme Court to hear. And now, the final verdict has been delivered by the Supreme Court. That essentially means it's a very positive development on the overall framework, positive development for the insolvency and bankruptcy court framework as well, as this acquisition was one of the biggest resolution under IBC. Therefore, Government of India must be very relaxed at this point of time, because the IBC framework is something being considered as one of the biggest governance reforms, corporate governance reforms in independent India. And therefore, after this judgment, the overall insolvency and bankruptcy framework will continue as it was earlier. Back to you.
Thanks, Prakash. We have Mr. Sumant Batra, Managing Partner, Head Insolvency Practice at Carysil, Das and Associate. Mr. Batra, do you think that it gives you a big boost to the entire IBC process because it put the entire thing on question after the Supreme Court or the Apex Court, ruled in May that the entire process was not as per conformity?
Well, yes, of course. More than it bringing relief to JSW, that its resolution plan has been affirmed by the Honorable Supreme Court. What it does is it brings a great amount of respite to the market, to the investors, and of course also to the government, because that judgment had in fact created a kind of a disruption and created so much of uncertainty around the IBC process, because a plan that had been approved 4 or 5 years ago and had been partly implemented was sought to be set aside on certain aspects, which the review judgment has clearly held that was an incorrect view. So it's a remarkable judgment. It is restoring the confidence in the IBC, and it will go a long way in reaffirming the faith in, as was mentioned by your colleague, what is the blue chip reform since independence in the independent India.
Just hang on there. We have Mr. H.P. Ranina as well, lawyer and senior counsel at Supreme Court. Mr. Ranina, it's very rare that the Apex Court goes back on its own verdict, and this time it has done that in the IBC. In May, it ruled the entire process of Bhushan Steel as not per conformity, and then went ahead and allowed the review petition, and now going back on its own judgment.
So I think it is a good decision. Supreme Court also reviews its own decision if certain implications are pointed out to him. And this time it was pointed out that if you go into liquidation, there'll be a lot of complications, a lot of things will have to be overturned, a lot of employees will lose their jobs, financial institutions will not be able to recover their funds. So it is best for the merger to go ahead. And therefore, this is a very landmark decision, important historic decision, because it will mean that it will apply as a precedent for other situations like similar situations where mergers have been approved. So I think the reversal of the earlier is a step in the right direction. It shows that the Supreme Court is always responsive to the very good suggestions, and if they are not frightened of fear reviewing their own case. So review is a very important point which the Supreme Court has, and they've exercised that power in this case because it is a very appropriate case to do so.
One important thing is that the kind of observations that it made in the May order when it ruled in against JSW Steel. Do you think that even though the Supreme Court has gone back on that order of on the entire IBC process of Bhushan Steel, there are the observations which have been made by the Supreme Court will have now to be put in place so that a process is followed while an IBC is undertaken? Mr. Batra?
Is that? Oh, is that for me? I didn't realize that.
Yeah.
Well, we still have to read the fine print of the law, because once we get our hands on the copy of the judgment, we'll be able to see whether the observations made against the COC, the RP, and some of the other players have been recalled. But what I heard from the concluding paragraphs that were read out by the Honorable Chief Justice in court, it appears that the Honorable Supreme Court has, in this judgment, reaffirmed that everything that was done by the COC was in order, and clearly both the SRA and the COC were very diligent. They were taking all the steps that was expected for the implementation of the plan, the speedy implementation of the plan. And from all that I heard, it appears that they have disagreed with the observations by the two-judge decision earlier. But I also see that besides, of course, making the corrections in the earlier order, they've also made a couple of other observations which will probably have a significant impact on the functioning of the IBC, although positively. But we'll have to read the fine print again, as I said, because they've said that the COC should continue to function even during the implementation of the plan, and or till the liquidation order is passed. Now, which means that they've expanded the role of the COC beyond just the stage when the plan is approved, but also have gone to the stage where they oversee the implementation of the plan, which is contemplated to be done by the monitoring committee earlier. So we'll have to see, once the judgment is a copy is available, as to what other observations have been passed by the Honorable Supreme Court.
Mr. Ranina, do you concur with what Mr. Batra is saying, that the role of CEC is now being expanded to monitoring of the entire or execution of the plan which is there, and thereby it has a much wider role at play now?
Yes, I entirely agree with what he says. We have to see the judgment. But normally the final judgment prevails over the earlier one. So, but of course, unless they have made other comments, the original comments will continue. So whatever is done will continue. And therefore, we have to read both the judgments together and see how it works out. Because if this particular latest judgment gives us a different view, then of course it will overrule the earlier one. But if there's no comment in the latest judgment, then the observations in the earlier judgment will continue to apply.
One of the biggest criticism of the entire process is that normally it should have been completed in 180 or 6 months or so period, but things are dragging on at IBC and resolutions are not coming through. Do you think that it will put in some kind of process in place for the faster resolutions of companies going through the IBC process?
Yes, that is something which the NCLT should do itself, because they were to set their own house in order. The problem with them is there are too many pending cases and there are too few members on the bench to hear those cases. So it's a very difficult situation. You can't blame them for the delays. Delays have to be sorted out at various levels where you have to have additional benches, additional members appointed, additional infrastructure, and then only the delays can be taken care of. Otherwise, the delays will continue.
Mr. Batra, one of the feedbacks that come in is that the kind of powers that is imposed by the COC on the entire process. Do you think that the current Supreme Court judgment brings in some kind of formality on the role of COC and the kind of powers it has with respect to the entire IBC implementation and execution of the entire plan?
Well, the role of the COC in order to exercise their commercial decisions and the authority that they have, the powers that they have, I don't think anybody questions either the Honorable Supreme Court or the law itself or IBBI or even the market. I think the only debate has been that those powers have to be exercised with care and responsibility. And there have been certain instances where certain decisions by the COC have been subject matter of scrutiny. And that's the reason where the Standing Committee of the Parliament had 3-4 years ago in its report recommended that there should be a code of conduct for the COC members, and which is what now is contemplated even in the bill that has been tabled in the Parliament on 12th August to amend IBC. But the debate still would be whether that code of conduct should be voluntary or imposed in the regulations by the IBBI, because there could be a bit of a pushback by the lenders to say that we are, we are regulated by RBI and not by IBBI, and therefore, even if it is the decisions taken in the COC, that can't be questioned by IBBI. That I would say is an issue that is still up in the air, but there's no doubt at all that the COC will continue to play a very important role in the IBC, except that they need to be far more accountable, and it should come through self-regulation rather than somebody breathing on the neck to say do it this way or that way.
Thank you, gentlemen, Mr. Batra and Mr. Ranina. Thank you very much for joining us today on ET Now and giving us a sense of what the Supreme Court judgment means for the entire IBC.
I now sell now with me Kanishka Sarkar and Ankita Saxena. This is a show where we take all your stock-specific queries with our experts. And today on the show we have Lancelot Dicuna, the Chief Investment Officer at ValueX Wealth Connect, joining us to answer all your queries. So request all the viewers to keep sending in your queries. Don't forget to mention your stock name, your holding time horizon, your buying price and your specific stock query, and we'll have them answered. Hi Lancelot, very good morning. Thank you so much for joining us today. So let's get started with all the queries then. And the first one is coming on Bajaj Housing Finance. The viewer Ravindra Kumar, he's written from Chennai. He says the stock has been declining, but what do you see on the cards? Are the fundamentals strong enough to hold this stock for a longer term?
Yeah, I think, if one is a long-term investor, it is a good idea to accumulate this stock, because while it sort of trades at a little higher multiple, so it is a little expensive in a sense that when you compare it with other housing finance companies, yet you are seeing significant growth in the order book, in the loan book of Bajaj Housing Finance. And you will be seeing, with the demand for middle and lower income housing, which is their target focus area, you will see that area expand more than probably the rest of the market. And also, with the Bajaj Housing, you have seen the low NPAs that they have, given their strict controls over their systems, etc. You will find that this company will be able to generate the efficiencies, and that will drive the share price up over a longer period of time. So if you have a 3 to 5 year horizon, definitely it's a buy or accumulate.
All right, a buy or an accumulate as far as Bajaj Housing Finance is concerned. But Lancelot, let's get in Kabir Bedi is writing in from Patiala. He says he's bought 1,500 shares of Venky's India at a buying price of 1,470. He bought it 3 weeks ago. He wants to know your suggestion on Venky's stock. Now, Lancelot, if you look at Venky's, the stock is one stock that has not done anything. In fact, it has been correcting for the last 6 odd months. In fact, in the last 1 year, it has eroded investor wealth. What do you see for Venky's? What should he do actually at this point? From what I can see, he's actually bought it at elevated levels, and now he's sitting at a loss. What should he be doing with this counter?
So, this stock actually had hit a high of almost 2,141 and has, been correcting since then. Even at this current price, the valuations are relatively high because it's trading at almost 60 times, its earnings. And if you look at the last quarterly profits, the profit growth was not really that high, and it was actually flat. So when you consider that, if you're not seeing, a higher profitability and a higher revenue growth, it's very difficult to justify, these high valuations. So the stock may correct, and there are much better operating, profit companies in the FMCG space if one wants to look at it, or even in the food and lifestyle space. So as an option, there are other companies which offer better risk-reward ratio, and one can look at those.
All right. So that's the view coming on Venki's. But before. Welcome back. You're tuned into Buy and Sell Now with me, Ankita Saxena, and Kanishka Sarkari joining us live from SBI Live Studio. And this is a show where we take all your questions. The number is flashing on top of your screens. Do write into us. And now we are joined by a live caller for the day, George, who's joining us from Chennai. Hi, good morning, George. Thank you so much for calling us. George, tell us what's your question.
Yeah, good morning, everybody. Actually, my question is, I am holding 175 shares of Tata Technology for the past 1 year. Purchased at an average rate of rupees 950. Now I am already about 30% loss. Now, what my question is whether I can utilize this opportunity to accumulate more shares of Tata Technology.
All right. Thank you for your question, George. He is holding Tata Tech, and clearly he is sitting at a loss right now. I'll come for both, actually. Let me come on the fundamentals as well to you, Lancelot. Tata Tech, firstly, on the fundamentals, what do you see for Tata Technologies? Because, I think the valuations seem to be a bit stretched for Tata Tech. But overall, what would be your view for the next 1 year? And should he really be holding on to it? Should he average in to cut his loss? Or what should be his outlook? Or should he probably cut his loss and probably park the money somewhere else?
So Ankita, this was one of the top IPOs and was very much in demand at the time. And so the stock listed at a high premium. But over a period of time, even at the current valuation, it trades at almost 40 times its forward earnings. And yes, it is in an interesting space because it is in the engineering services business, which is a very niche space. However, given this, the issues that are plaguing IT companies globally, I think there are challenges in the near term, and those could reflect on the financial performance over the near term. And if one is a long-term investor, then one should start to accumulate this stock in installments or in lots on the way down. Because as people who are holding it during the IPO or looking for quick gains, as the weak hands start to sell the stock and exit from the market, you could see some further downside. But that over the longer term, over the next 3 to 5 years, definitely this company will start to generate good returns, backed by good financials and profitability.
On Tata Tech, perhaps expensive valuation is one of the concerns, and the macro headwinds also for the tech companies could impact the balance sheet. But coming to you then, Osho, on the charts, what do you see for Tata Tech?
See, overall, technically, the counter is into still a negative biasness, but I expect that if there is any kind of dip towards the zone of 620 or 630, which even goes with a bullish gap on the daily time frame chart, so that will be a decent level to start accumulating or to have a decent amount of capital accumulated at that levels. But more of confidence will come back in the counter once it surpasses the zone of 730, which even coincides with the 200-day simple moving average. So above 730, we can see some kind of a strong momentum on the bullish front for the counter. While looking at the recent developments, I expect that the counter might see some kind of correction, further continued correction in the very short-term perspective, but that should be seen as an opportunity to accumulate the counter. Around 630 will be the first level to start accumulating on the lower zone.
All right, so that's the technical view on Tata Tech. George, hope your query was answered both from a fundamental and technical perspective. Thank you so much for sharing your query with us. But moving on, let's take a look at the next query. Now, this is Vaman writing from Hyderabad. His query is Astral and Reliance. Are the current levels good enough to put their money for a period of 2 years? Lancelot, let me come to you. What do you suggest? They want to invest for a period of 2 years. Astral and Reliance. Current levels good enough to enter?
So I think if you take Astral first, it's still, while there is an improvement or a revival in the market, it still is trading at almost 28 times forward earnings. And there is a lot of competition in the space, both in the pipe space as well as in the paint space, which Astral has also entered in recently. So given that background, there could be, a moderation in the margins going forward. And while the volume growth and the revenue growth may be good, margin growth could be muted for the next couple of months. And then one should look at it. So if one is looking at Astral, one has to probably wait for a while, maybe accumulate the stock around 1250 levels, and that would give you a good level to buy into the stock. As far as Reliance is concerned, I think given that it is looking to list its retail business, in the near future, we should see some amount of advantage in, continuing to hold on to the stock and maybe accumulate at lower levels.
All right, so that's the view on those couple of stocks that we mentioned, Reliance and Astral. But let's move on to the next question then. This is coming in from Venu, who's a senior citizen, who's writing in from Chennai. He says that after many months, Hindustan Copper has crossed the 325 mark. He holds 1,000 shares at a buying price of 290. So clearly he's sitting at a profit. Congratulations, Venu, to you for that. And now he says, is the risk reward favorable to accumulate more? He also wants to know if M&M is a good buy. Osho, I'll come to you for this one. Now, Hindustan Copper was in news yesterday. We did see copper pricing hitting highs on London Metal Exchange, and on the back of that, Hindustan Copper was rallying yesterday, and the entire metal pack was in focus, in fact. But now he wants to know if the risk-reward ratio is favorable to accumulate more. Would that be a good idea, Osho? And also talk to us about M&M and the good entry price for it.
Firstly, for Hind Copper, this counter has seen a very strong breakout on the technical front around the zone of 280, which even targets a price of nearly 340 in the short-term time frame. But looking at the recent vertical rally, there is still a possibility of some kind of profit booking from the higher levels. So it will be advisable to trail profits with a stop loss of 310 at current levels. Although on a positional front, I expect 340 as a target for the counter. But still, if it comes down towards the zone of 280, then still one can look for accumulating the counter once again. So this is an opportunity to accumulate the counter and trail profits at current level. So 310 will be the first stop loss and 340 will be the target. Now coming to M&M, this counter have started gaining huge traction in the recent period, but overall the secular trend is still positive, but overall the technical parameters have been on the overheated front. So there is a possibility of some kind of profit booking in the counter around the zone of 3400 to 3360 will be an apt level to start accumulating the counter from medium to long term time frame. For now, better to stay sidelines and wait for profit booking to halt, and then can start looking for accumulation in the counter.
All right, so that's the view on M&M. But with that, it's time to take a quick break. But before that, here's an update that has come in. The Supreme Court was to hear deterrent Vodafone Idea's plea against the government's AGR demand today. However, the top court has deferred the AGR plea hearing to October 6 now. So next is October 6 when we are going to hear more about this case, the AGR case that Vodafone has petitioned for. But on that note, we'll take a very short break.
Welcome back. You're tuned into Buy Now, Sell Now, a show where we get all your stock-specific questions answered. But before we get going with all of that, let me get on board the management of Carysil Group, Chirag Parekh, Chairman and MD of Carysil Group. So basically, we had a big announcement on the tariffs. It's a 100% tariff on branded pharma products and a 50% tariff on kitchen cabinets. Now, while Carysil had given a clarification in an exchange filing that they wish to clarify that it do not have any export of kitchen cabinet and bathroom vanities, and hence this announcement does not impact their company. While that clarification has come, we do see the downtick come in on the stock. The stock is down 4.8% as of now. But Mr. Parekh, tell us, even though your company has clarified that you do not have an exposure in that regard, but with this announcement, how is this likely to impact the industry? A 50% tariff, how viable is it, and what's going to be the impact on the players?
Yeah, so I think first I want to clarify that completely misinterpreted this whole situation on the kitchen cabinets. I've been getting calls since morning. First of all, there are two things I want to clarify. First, we do not manufacture kitchen cabinets, nor we export to the United States. Second is that our kitchen sinks do not fall part of the kitchen cabinet or the bathroom vanities. So our exports to the U.S. is strong. We also clarified with our U.S. With our U.S. clients. So business stays as normal as of now.
All right, so business stays as normal as of now, despite the tariffs that have come in, and that you're not affected by that. But Mr. Parekh, hi, this is Kanishka also joining in. Just wanted to understand, like Ankita was mentioning, if you could help us understand, give us a little bit perspective on how this is going to impact the overall industry. While you may stay unaffected, any insights that you can give us with these tariffs? How is the rest of the industry, your peers, how are they going to be affected?
So I think the major impact had come when the U.S. put 50% tariff, 25% plus a penalty, 25% on India, right? So I think that 50%, as far as the Indian companies are concerned, was happening. We have, like I clarified yesterday also with some of the investors, that we have negotiated with all our clients in the United States, right, to how do we going to bear this tariff, which from our side and the customer side both feel is going to be short-lived. So we have given some discounts, which is not going to have a major impact on our margin model. Our clients, we have great relationships with our clients. They also going to sacrifice. I think so. That's one. And we also recently announced we had a massive deal with Lowe's United States, which got closed 90 days, and our sinks are flying. We are kind of right now the highest order booking with Lowe's right now. That's point one. The two is kitchen. It is. I think it's a great opportunity whenever any of the tariffs announcement taken by the U.S. Whenever the U.S. administration announcing tariff. So I think you should kind of look at this as an opportunity, because the more the tariffs come to the United States, the more competition is going to be more and more. It's going to be less for you, right? Because it's not that many players are able to get benefit or will able to sustain such high tariffs. So I believe we are in a position right now. Either peers may have really a bad time right now with this. I don't think you'll be able to sustain this. I completely believe that our manufacturing story from India, Carysil being one of the lowest cost producer of kitchen sinks in India, I think we're going to have a tremendous benefit moving forward once this penal tariff is off.
All right, Mr. Parekh, thank you so much for taking the time out and giving us the clarification and joining us and weighing in on what is going to be the impact on the industry in general. With that, we'll let you go and we'll resume with the buy now, sell now. We do see a knee-jerk reaction coming in on Carysil. The stock is down now more than 5.5%, even though they have given a clarification that they do not manufacture kitchen or bathroom cabinets and they do not even export to the US. Nonetheless, despite the clarification, the stock is reeling under selling pressure. But let's resume with all the questions then and get going with all the questions that you have been sending us. Now, this question is coming in from Sanjay, who's writing it from Bangalore. He says that he's a regular watcher of Buy Now Sell Now from 2015. Thank you so much, Sanjay. That's been a really long time, and thank you for staying put with us. He says that he wants good entry levels for Trent, CDSL, and PNB Housing. He also wants a fundamental view on both. All right. So there are three counters that he's mentioned. First, we'll get the entry levels from Osho, Trent, CDSL, and PNB Housing. What would be the entry levels for these three counters?
Firstly, for Trent, I expect the momentum on the downside could be continued. On the lower end, I expect for 4,500 to be seen as a very strong support levels. So any further correction towards the zone of 4,600 or 4,500 can be seen as an opportunity to start accumulating the counter. Technically, it has already entered into oversold terrain. So I expect that from here onwards, the downside is limited and one can look for accumulating this counter from a longer time horizon. Now, coming to CDSL, this counter is facing some kind of consolidation because of the news related to F&O expiry. So I expect that once there will be some clarity from the exchanges, then we can see some kind of a strong momentum coming back in the capital market counters. Overall, the counter is very positive, and from a longer term perspective, one can look for buying opportunity. Currently, it is placed at very strong support of 200-day simple moving average. So again, with a view that it has a limited downside on the lower end, 1420 to 1400 is a very strong support levels for the counter. So one can look for buying opportunity in the area of 1450 to 1420 from a medium to long term perspective. Now, third counter was PNB Housing Finance, correct?
That's right, Osho.
Housing finance have seen a very steep correction and is now hovering below the 200 simple moving average. So I expect that once the counter starts a strong consolidation, that also be seen as a support, strong support formation for the counter, then one can look for buying opportunity. Currently, it is hovering around the bearish gap, even coinciding with the 200 simple moving average. So better to stay sidelines. If it consolidates further in the zone of 840 to 820, then one can look for buying opportunity from again a medium term time horizon.
So those are the entry levels to watch out for PNB Housing, CDSL and Trent. On the fundamental side, what do you see for the next? He's not given actually the time horizon or the holding period, but let's take a 1 year perspective on Trent, CDSL and PNB Housing.
So I think, if you look at the 1 year growth of CDSL or Trent, let us take Trent first. We expect to see at least 18% revenue growth on this for Trent, and margin growth has been about 13-14%. With inflation coming down and with operations of scale actually kicking in, I think there will be some margin improvement in Trent as well. And that would lead to higher profitability. However, the stock currently is trading almost 80 times its forward earnings, and that is a really high multiple. And in case, in 1 or 2 quarters, if the growth doesn't sustain, then you may see this getting re-rated down again. But if one can actually accumulate this at maybe 20% below this current price, that would be a good opportunity. Otherwise, one should probably wait it out, and there could be other stocks in the lifestyle space with lower valuation that could offer a better risk-reward ratio. As far as CDSL is concerned, the stock is showing good growth given the increase in the number of demat accounts, as well as transaction charges are growing, as well as the AMCs are growing. This can be a long-term compounding story, and one can look at accumulating the stock.
Got it. Okay. Thanks, Mr. Lancelot, for that view. But with that, we're completely timed out on this edition of Buy Now, Sell Now. Thank you so much for joining us today. Lancelot, Osho, we'll let you go. Thanks so much. It's a wrap on this edition of Buy Now, Sell Now. Don't go anywhere. Markets at noon coming up next.